Too many of you are stuck thinking the stock market is the only real game in town. You watch indexes crawl, get frustrated with mediocre returns, while hearing about these private equity wonders crushing the public markets year after year, and you're left wondering, what's the secret? Why aren't you seeing those kinds of gains in your portfolio? The truth, nobody talks about it because it's uncomfortable. Private equity isn't magic. It's brutal. It's relentless. It's hands-on. And if you want in, you have to get your hands dirty and your head straight. You're chasing freedom and results, but you keep falling into traps that kill returns. High fees, middleman nonsense, shallow due diligence, and the illusion that diversification equals safety. It doesn't. That's how ordinary money gets ordinary performance. Here's the brutal fact. Private equity beats public markets for one simple reason: control. When you own pieces of private companies, you aren't just a passenger riding market waves. You're in the driver's seat. You can push hard, steer strategy, cut costs, relocate talent, change managers, things public investors never get to do. The problem? Most people don't realize how deep this control goes or how to actually wield it. You're not going to get those outsized returns by just writing checks and crossing your fingers. Your money has to be active, deeply engaged, and continuously optimized. And that means cultivating relationships with operators, founders, insiders who will actually execute. And not just any operators, the right ones. The ones who don't just preserve companies, but explode their value. You've got to become obsessed with deal sourcing. The old ways, auctions, broad networks, cold calls, they don't cut it anymore. The best deals come through tight, trusted networks. Family offices, founders, and visionary investors working together, sharing intel you can't find on Bloomberg or Crunchbase. You've got to build that ecosystem around you. It's a muscle, and like any muscle, if you don't train it, it atrophies and you fall behind. This isn't a passive game, it's a fight, every step. Then there's the brutal chore nobody likes: operational involvement. You want to beat public market returns? Get ready to fix broken companies, tear apart business models, redesign sales funnels, slash customer churn. Hire or fire CEOs, rebuild boards, and track every key metric obsessively. If you think you can just throw money at a company and pray for growth, you're not playing private equity, you're playing hope. And hope is the worst investment strategy possible. Margins matter, growth matters, scale matters, but none of it happens by accident. Private equity lives or dies by a killer exit strategy. You always have one eye on that exit from day one, IPO or strategic sale. It doesn't matter. What matters is you plan every step before you ever sign a deal, timing the exit, understanding market cycles, prepping the company so it can shine when the moment's right. That's how you multiply returns again and again. Fees and structures? They can crush your returns if you're not careful. Most people accept the standard 2 and 20 without question. That's throwing cash away. Negotiate hard, demand alignment with your interests. Insist on transparency. Cut everything that doesn't add value. These fees should be fuel for growth, not a slow leak killing your momentum. You want to leave mediocre returns behind? Focus on transparency, discipline, and relentless improvement. Build a family office that's more than a money manager. It has to be a powerhouse of connection, expertise, and execution. Link up with founders who live and breathe their vision. Investors who aren't just writing fat checks, but are active participants in the journey. Family offices that don't follow the herd, but break new ground every damn day. The truth is harsh, but here's what you need. Cut the BS, die on discipline. Find, fight for, and own real control. Build a network where every member pushes the others forward, because only then will private equity deals blow past public market returns, and only then will you escape the slow drip of mediocrity choking your investments. You want out? Now's the moment. Start acting like the owner you say you want to be. Subscribe to our YouTube channel and check the featured link to discover more.